Hi, everyone. How's everyone doing? Sorry, I was in a trance, staring at moving averages. Hi, Brock, Paul, Prabach, everyone. How are you, Shahab? Okay, so to me, looks like do or die here in Euro USD, and probably it's going to come down to the NFP tomorrow. Um, yeah, 1080. That's where my stops are under 1080. I'm gone if it takes it out. Yeah, I don't think the action's that great. I mean, we just can't get any follow through to the downside in the dollar. Kind of a tough call, the dollar. Everyone I see says, "Oh, well, the dollar's in the same spot it was in 2014," and everything. Everyone's saying sideways, sideways, and you know what? They're right. We keep looking for major turns and major moves, and it's a range until it's not a range. It looked like we were going to finally have a breakdown under 97, and no follow through. And this, I was looking for a rally this week in the end. But I was, salivating to, get short up around 109, but it's not just the price, it's how it gets there. And so after, the 1 hour war with all of these stops above here, and you could even go back further. I mean, do you think there are a few buy stops here? What do you think? You think there's, at least one retail trader has a stop at 109.73, and here we are at 40. You think they're going for them? So sometimes when you have days like this and there's going to be a stop hunt, you could actually go with it until the stops are elected. I mean, technically that was a great day, and then there are a ton of people that are short thought they finally had a breakdown, and here we are, and now they're hoping. Oil. Steve had a great vibe on this one, but kind of an interesting place it stopped so far. But I've seen some Elliott counts, and the doomsters that were looking for $37 crude. Even though this happened, I saw the wave count is still valid. So maybe this is the beginning of a big break in crude, which, this isn't the environment, it's counterintuitive with, the Straits of Hormuz could be closed tomorrow night. It's hard to do, isn't it? With what's happening in the Middle East, you have people talking 100 oil if that choke point, there's any kind of shutdown. And I'm a little nervous about our confidence. The president said we don't need Middle East oil anymore because we're the world's largest producer. I'm not so sure, especially after talking to Bryn Kelly, who was talking about what WTI, and it's not the most desirable crude, and the heavier crude is more desirable. It seems to get a premium. I guess that's why Brent trades at a premium, unless I'm guessing wrong. And look at gold. So I know I talked about it before it happened, but um, this could be a two. This could be drive 2 on the gold. Which if you get a 3, you should get a pullback and then another blow. But pretty negative week. Silver, didn't rally as much, and its candle is negative. It didn't make a new high. I don't know. I guess metal bears could say ABC for A, and this is B, and now we could get C. And if we have equality, I mean, I was only talking 1740, but if you really want to be a bear and we're going to have another big dollar rally, maybe it's weaker into the spring. But not a good week for precious metals. Real negative week in crude. So short the weak sister, sell rips and crude. At least now you have a, you probably don't want to do it here at $60 with a 65.5 stop. But if there are any rallies that occur, maybe do a fib of this candle or wherever the low comes in and then look at something like that. Okay, I see someone's raising their hand, but I'm not sure. I can't find it. Hi, buddy. Okay. Any questions on anything I covered? Okay, also this. I know I'm the boy who cried wolf quite a few times, although sometimes it's work, even when you're on the wrong side of a trend, if you trade counter trend, sometimes it could work. Like gold early in the week, for sale from Sunday night. And then silver, even though I was early, worked out, although I got out yesterday, I'm not taking advantage of this. But look at this. That's a weekly. I know we have major divergence, but look at every time frame. Weekly, look at daily. I can't remember the last time. I know there's been, look, I know divergences are not the only thing. You need, price action above all, but there's your daily. Oh, thank you, Najulo. So glaring divergence on the daily, right? Glaring divergence on the 4 hour, see? And even the 1 hour? Yeah, still not confirming this high. How about the 15-minute? Maybe you got a little bit of a confirmed high here, but I do think we're close. I've seen a lot of inflection points on the NFP. The guys here, Blake and Steve, have pointed towards a fib number up around the 3,300, I believe, the golden ratio. Blake will give you the exact number. Who knows, on a good NFP, maybe we spike up there. But, have you ever been in the markets, if you've been around for a while, that something is so close you could taste it? That's how I feel now. Okay, Blake, so how you doing, buddy?
Good. A little sleepy. I got up a little early this morning,
Yeah, me too.
accidentally, just
Yeah.
kind of opened my eyes and
Yeah,
said, oh, well, I can't go back to sleep now. One of those
yeah,
types of
that
situations,
happened
but,
to me. Today was 3.
huh?
Today it was 3 a.m. for me.
Yeah, it's always
Yeah.
fun. I actually got stopped out of my euro overnight. And then when I got up, I'm like, oh, that was a stop run.
Sorry.
And I entered it. I entered back in. So and it's like, I'm out a couple of pips from, where I got stopped out. I was like, it got stopped out just below 111, and I picked it up right above 111 again. I'm like, oh, well, I knew we were around a lot of support down here. And when I went to bed last night, I'm like, I think I have my stop too close and to where it's going to get hit. But I still think that the euro, we could still actually hit new lows on the day. But it's really not my focus because I'm trading so small with the euro. I'm not really focused on it right now. My bigger position right now is the Aussie Canadian, and that it's not a currency that I follow with. We follow as a company with ForexAnalytix, but something that I picked up yesterday, and this is really my focus right now. And I discussed it a little bit yesterday. I like the Aussie Canadian, and there's a few reasons. First of all, is because crude oil is weak, and I think that crude being up right now, will end the day lower. So that's going to just continue to help the Canadian currency lower, in my opinion. And one of the things about the Canadian that Amanda pointed out earlier today was that the dollar Canadian's holding up really well with risk appetite going, very strong, and that I have to agree with. I'm sitting there looking at the dollar Canadian. Typically, that currency pair moves lower when you're highs, you know, if stocks are rallying. And it's actually, I think it's following more crude at this point. The Aussie should stay relatively bid. You know, the Australian currency has been hit because of the fires, you know, and that's kept a lid on the Aussie dollar. Once the fires have abated, you know, the market's going to start looking ahead at saying, okay, you know, what has to be rebuilt, and you know, how's that going to affect GDP, and the after the like a natural disaster, there tends to be you know, a currency move when, you know, markets start pricing in what, you know, needs to be done after as far as the aftermath goes. So I think the Aussie, with risk appetite, you know, following these Australian fires, is like I said, as they start to abate a little bit, this Aussie dollar should get a lift, which in turn I think is going to help the Aussie Canadian. So that's where my focus is today, really. You know, yeah, I have a little bit of euro exposure, same exposure I had yesterday. It's not very much, but I won't be in it unless the euro just for some reason, you know, rallies to 111.50. You know, even if it rallied towards 111.50, I don't know if I'd hang on to it going into tomorrow. You know, towards the non-farm payroll. You look at the dollar yen, and you were talking about the dollar yen and about the stops that are hanging out probably above the 109.70.
Yeah.
Which, you know, Dale, I would have to agree. There's going to be a lot of stops up there. But do you know what else is up there?
What, bro?
If you look at a day, actually, you know what? Let's go to a weekly chart.
Oh, you got a return line up there? Or...
Yeah, this is the massive,
Oh,
massive.
so it would be a breakout over the triangle.
Well, yeah, if we get a foothold above 110,
yeah.
Now you're talking about a massive move in the dollar yen. And this is a weekly chart, so just think about this for a second. You know, how we react at 110 is going to be pretty key. I would assume that we could, you know, very easily break above 110. We could, you know, get to 110, you know, 110.20 just on stop losses alone. But where we close is going to be vitally important for not only the dollar yen, but also for risk appetite. It's going to be for bonds and yields and gold. Yields. I mean, there's a lot of ramifications on a big upside break in the dollar yen. So I'll be watching the dollar yen as we approach 110. I have no position in the yen right now, and I have the only view that I have, and this is something that, you know, I want you guys to hear it, because this is something that I feel is very important. The yen has not rallied with risk appetite. Okay. Let me actually rephrase that. The dollar yen has not rallied with risk appetite, but it has fallen when there is risk off. Shoot, I meant what I meant to say. You know, you get what I'm saying. Yeah. Uh-huh. So when the stock market takes a tumble, the dollar yen takes a tumble. When the stock market goes up, it doesn't go up. Well, I mean, it does, but it's not this week. Not the way, not in proportion to what stocks are doing. Yeah. So that goes back to what yield you were just talking about with the S&P. So here we are in the S&P, and like I said, I think that 3,300 is going to be tested. We are at all-time highs right now in the S&P. We closed at all-time highs yesterday. And I think we're going to 33, you know, 15. This is on the ETN. So what I can also do, let's go to the S&P, the actual index. That's the CFD. That's what we're doing here. I don't want to do that. I want to do the index. Okay. And so the index points at 133 or 3305 on the index. Okay, that's where we would hit. So let's just say roughly just above 3,300. So, but 3,300, the reason why this 3,300 or 3,315 level is so big is if you look at the move, when we bounced off of this trend line, this is the upward sloping trend line post the Iranian, attack there. We hit that trend line and bounced like a bat out of hell. And like I said yesterday, I wasn't even looking at that. I was so busy focused on FX that I, didn't even see the S&P when it hit it. But the 161% extension of that move also comes in at 33.15. So, and this is on, this FXCM CFD, which again, for the index, it's probably around 33.05. Okay, on the S&P cash market. So why is this so important? Because we are at an inflection point, not only at a key fib level, but also at the dollar yen. So I think if we get there in the S&P, the dollar yen is probably going to be at 110. Now, let's say the market does this. We get to 3,300, we stall, and then we rip, and we go into like this acceleration phase higher in the stock market, which is entirely possible, and you can see like the ramp up in the stock market just continues. Where does the dollar yen go? Well, that puts us in probably
114.
Yeah, it puts us in a real big breakout situation where,
Yeah, bulls for a long time been talking in the 120s.
Yeah, I mean, at least, depending on how high the stock market can go. I mean, we could see 112, 114. Yeah, I think it's all possible. Making a big move up here, because then the dollar yen would finally let loose. And
that would be about 230 10-year yields if that scenario unfolds.
Quite possible.
Because you have an ascending triangle in the 10-year yield.
And you think about that, a ramp up in yields like that would actually have a negative effect on equities. So what I could foresee here, if I, just imagining this happening, this big ramp up, we would get a big ramp up, stopping everybody out, and then, reversing after that as yields rally too. So the dollar yen could do a quick spike up to, we could do a quick trip up to 112, 114, and then reverse, right? Or, we get up to the 3,300 level in the S&P, and let's say that golden fib is just that, it's a golden fib and really rejects price. So, we
Blake,
get the boop, 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 boop.
Good
And what
morning,
happens?
Blake.
The dollar yen,
We just got some Canadian data, by the way.
Oh, we did? Dang it, I'm
Yeah.
sorry.
Canadian housing starts 197.3 versus 2010 expected. So not much, but another weaker piece of data.
I was, thanks, Steve. I appreciate that. And I wasn't even paying attention. And I was like, oh, look, my P&L went up, because I'm long Aussie Canadian right now. I'll have to go back and finish my thoughts on the S&P, but I was reading one of the analysts that we follow as a firm, and he was like, I'm looking to fade this dollar Canadian here in 130.50 resistance, ahead of tomorrow's Canadian jobs report. And actually, if you look,
NFP.
CAT FP, right?
Oh yeah.
So if you look at Canadian jobs report and their data, when you have big outsized moves lower in Canadian jobs, the recovery the following month is usually pretty good. Like over here, you can see it's a beat. Over here, outsized moved, a beat. Outsized move, didn't beat to the upside, but it's still, it was positive. We were expecting a positive number. Outsized move, beat. Outsized move, beat. Outsized move, beat. So outsized move, beat. So when you have an outsized outsized move lower, it tends to beat the following month. So, the 25,000 jobs that Canada is looking for, you can argue that it's probably going to be a good number. Will it be a good number? I don't know. As Steve just pointed out, the Canadian data has been, generally speaking, pretty weak. So I don't know. Will their jobs show something a little different?
I actually was saying the other day, I think yesterday or the day before, I think we haven't gotten a single piece of data from Canada since like the middle of December that was as expected or above expectations. I think we've had a miss or a horrible miss in every single piece of data we got during almost a month. So it's a streak of bad data coming out from Canada.
All right. Well, there's something to be said for that. So, will it affect their jobs market? We'll see. Because, if you look at the U.S., some of the weaker data points that we've seen hasn't translated as the weaker employment at all. So, we'll see tomorrow. But thanks for the heads up, Steve. Going back to my comments about the S&P, in the event the S&P stops at the 33 3,300 level or whatever, the dollar yen reaches 110 and we reject that price, then the dollar yen rejection at 110 would be really big. And the reason why that would be really big, in my opinion, is because you have a situation where everybody is all the short-term traders, you have to look at the dollar yen, what it was doing just a week and a half ago, right? Let's, take away what's happened over the last, several days. But, a week ago, we were selling off, breaking down below the 200-day moving average. Probably a lot of model funds got short, dollar yen. Now they're getting squeezed, and the squeeze could actually take us above the resistance, which is going to trigger buy stops. But of people that are looking to get long and think this is a big breakout, maybe they're looking at this triangle a little different than me, and they're saying, okay, above 109.70 is just a big, massive breakout. So you're going to get a lot of people that buy stops, people that are saying we are going above 110, so I'm going to get long early. So you're going to get a lot of buy stops up there, and then obviously everybody who's short is going to get stopped out. So you get a bunch of buying, and if we do a big break and then false break, that would be, for me, I would be selling the hell out of the dollar yen, especially if the S&P rejects up there. Now, one last thing I'll talk about before I turn it over to Steve and Stelios here, and obviously Coach as well. What else is happening next week? Bueller.
President's Day.
Come on, even some people in our chat are come on. I'll let you guys actually make it.
We got a day off and have a parade.
Thank you, Jane. Thank you, Jane. Jane's awesome. The U.S. China signs the Facebook.
Oh gosh.
So
that should be a holiday.
Dale, go back 6 months or a year ago, and you remember what I had to say about the China-U.S. trade deal?
President's Day.
Bueller.
That it would happen because it would help Trump in the election.
No. When it happens.
Oh yeah, that's your bulge.
That is my. I'm looking to sell S&Ps.
Yeah.
Now, the trade deal was announced, but it's announced. We know it's coming, but when it gets, when both parties pee on it, then they mark their territory.
Then it's official. Yeah.
Then it's official.
Yeah.
I'd like to see how the S&P reacts, because my intent for the last year has been, when this trade deal gets done, I'm going to short the S&P.
Yeah.
Now, obviously I got to watch price action. I'm not going to blindly go, it's over, and then I'm going to short it. That would be silly. But remember, for the last 6 months or a year, I've been saying that, when this deal gets done, I am looking to short the S&P. And, it's interesting how all of these levels are coinciding, right? Whether you're talking about 3,300, 110 in the dollar yen.
Yeah.
And let's say that my initial reaction from 6 months or 8 months or a year ago, because I've always been saying, hey, as soon as this deal gets done, I'm going to look to sell the S&P. Let's say that I'm right. And, we watch the price action in the S&P, and it looks like it's reversing from this 3,300 level. I'm going to start laying into some shorts. Obviously, when you're fighting a big trend like this, you can't just, go all in. That's not the kind of trader I am.
Interesting though how it all unfolded and everything's kind of manifesting at the same time.
Right. So again, I don't ever, look at myself as a big future predictor of big key events, but this is something that I've always felt, and I've always felt in my gut.
Steve has talked about your trader intuition many times over the years, Blake, about that. That was one of the things that that you have the ability, it's you feel certain things in your bones, and it's trader intuition. And every once in a while, I've used the expression that sometimes things are so close you could taste them.
Yeah, and you know what, and that's what you said a little bit earlier, Dale, and frankly, I agree with you. I think we're getting close, and so maybe we'll get a blow off top. Maybe the S&P will just rally past 33.15 and head to 3,500 before it reverses. But I really am very interested to see what happens this next week. I think a lot of things are coming together just the way I want to see it. But I haven't taken action. I'm just sitting on the sidelines. And that's it.
I know you, Blake, and you do have very good forecasting skills, but you're a trader, and I know what you live by. Do the right thing today, and tomorrow takes care of itself.
Yeah. Well, there we go. Thank you very much, and I agree with that.
That's what you have to do.
I just built my case. Steve, I think we probably have more data coming out, right?
Yes, we have initial jobless claims coming out.
Jobless claims.
20 seconds.
When's the last time we saw like jobless claims creep over like 250,000? They just don't.
Obama.
Full employment. Yeah, probably. I mean, it's so
08.
Not interesting right now, but that doesn't mean that we won't get any moves here. So let's just see what happens.
Yeah, as expected. Non-event.
It's down again.
Look at Canadian data again, Blake.
Bad data. Very bad data. Canadian data continues to be weak. Jobless claims beat. Market's not going to move. All right. Good morning, Stelios.
Another piece of horrible Canadian data. I mean, we expected +1. We got -2.4.
Yeah, we'll see. We'll see. I hope tomorrow. No offense if you're Canadian. I hope we have another string of job losses. It'll be good. It'll be good for my P&L, but that doesn't mean anything for. Definitely doesn't mean anything for anybody else. So, how you guys doing today?
Very good, very good. By the way, that thing that Blake you feel in your bones, I think it's arthritis, isn't it?
That's so funny, Stelios. I was actually doing. I had one of my gifts the gift from my kids, believe it or not, was a
cane,
a kettlebell. No. It was a kettlebell, and so I do kettlebell workout, and I'm doing squats with my kettlebell, and oh my god. I was like, what's wrong with my knees? Anyway,
last time I checked, Stelio, you're 1 year older than he is.
Yep. Yeah, you're gonna hit 50 before me, so just remember
that. But to be fair, this bastard is in a super fit condition, Blake.
He is. I've seen
Is.
Stelios. He's lean, green, mean,
Yeah.
fighting machine. So
Yeah, not quite. But yeah.
Anyway,
All right.
well, guys, I just want to wish everybody. Hey, listen. You know, we talk about FX all day long in our chat room, and to get to our chat room, if you're logged in the ForexAnalytix, is right here next to your icon. So make sure you log in and come chat with us when you're a ForexAnalytix member. We're going to have our annual beginning of the year special coming up this week, this Friday. So take advantage of that, and make sure if you are looking for a broker, visit our broker sponsor our webinar sponsor, Forest Park FX. We've been working with them for years. They're awesome at just finding you the best broker suited for your needs. So, you know, you can get involved in the reimbursement program, and if you qualify, you could quite possibly get ForexAnalytix free of charge. So make sure you contact them. Their email and their Skype is right here, so you can call them directly or you can email them. With that being said, guys, I'll turn it over to you.
Good hunting.
Thanks, guys. Good luck today.
Thanks.
Hi, guys.
Hi, Dale.
Hey, Coach.
Hey, buddy.
So,
Hey, Phil.
Steve.
is it Friday yet? Not yet. Okay, one more day.
Not yet. We got used to the previous weeks being like half weeks or two trading days or whatever. So this week suddenly feels too long, right?
Yeah. So we've got the three main things that have been happening over the past few weeks and months, right? U.S.-China trade deal, Brexit, and.
But by the way, Stelio, you American and Chinese translators must be like the worst translators on the planet, right?
Why?
They've supposedly been translating this deal for.
Okay.
Now?
Yeah.
Like more than a month.
Yeah. So we have these three things, right? US,
they brought
China,
in a Japanese guy who doesn't speak Chinese.
Most likely, I mean,
I
bet that a good translator could have learned the languages from scratch and done the translation within this period of time.
Yeah. So like Blake said, we have next week. Vice Premier Liu He, or whatever, however you pronounce that, is going to Washington, and phase one is apparently going to be signed. We wait to see what happens afterwards, because like we've said before, phase one is really just an affirmation of yes, we're going to move forward, and there's a lot of detail still to be.
The great thing with phase one, Stelio, is that we'll get all the chance of getting the same process repeated again for phase two. So I'm pretty sure that once phase one is getting signed, we're going to start getting the rumor mill again. We're going to be getting a couple of times per week rumors from the US saying that they've already initiated negotiations for phase two. The Chinese are going to be saying that that's not the case initially. And you know, this is a process that will be, in my opinion, ongoing until we go to the elections, because in my opinion, there is no chance that we're going to see a phase two deal pre-elections, but we will definitely get a lot of promise that a phase two deal is, is progressing and it is imminent. And then when
we're only 9 months away from the election.
Yeah,
so
exactly. And when we go near the elections, we're going to start hearing from Trump that, you know, a phase two deal is very close to being accomplished, and it's going to be great, the greatest deal ever. The only thing that is needed is for him to get reelected so he can, you know, go ahead and, you know, sign it.
Let's see what happens with that. We also had Mark Carney was speaking, the chairman of the Bank of England, and he was yet again dovish. He said that if the economy continues to be sluggish, rate cuts might be needed. The good thing is that this January meeting is his last, and he's leaving. Andrew Bailey's taking over. We don't know yet which way he leans in terms of dovishness or hawkishness, but
you mean dovishness or extreme dovishness? Because
so
I've yet to see a hawkish central banker, right?
Yeah. So I was going to say I would assume he's going to be leaning on the dovish side, but you never know. So that brought some weakness to the pound this morning. And, Carney has been quite unreliable over the past few years. He was hawkish, famously on that Mansion House speech, very hawkish, and then he was very dovish and just all over the place. So I personally would be happy to see him go. No disrespect, but yeah, good riddance. So what else do we have? Oh yeah, we also had some, the flavor of the month is basically, what's been happening with the US and Iran. And remember, the Iranians mounted an attack on a US base, which had been evacuated. And we had some comments today on that from an Iranian commander who said that the aim was not to kill US troops, but to damage America's military machine.
One of the best tweets I've seen this year is a guy saying, now the Iranians are also part of the plant's protection team.
yeah, that's a good one. But
they managed to get the market dumping during off hours.
Yeah.
But until the markets actually open, we get enough news for the market to dismiss any negativity having to do with Iranian news, and we can resume, to the upside.
Yeah. So they also said that this was the first attack of an operation that's going to continue across the region. Blah blah blah. They're talking the talk, but at the moment there's no escalation, and risk markets like that. Remember on yesterday's webinar, I said, look, if nothing happens, I won't be surprised if the markets rally quite a bit and squeeze. And the S&P squeezed, what was it, 0.6, 0.7% yesterday, another 0.5% today.
And if we take into account the fact that it was negative 2% overnight,
yes,
quite an impressive move, right?
Very big swing, yes.
Yeah.
So on that front as well, there's no escalation. I hope there won't be any, but for the sake of people in general. But markets like it, and they will continue to like it, I'm sure. Going into the next few days. So that was pretty much it. We did have some. German data, trade balance was weaker than expected, exports weaker than expected. It was, we're seeing pretty mediocre data from Germany, which is not a good thing, the biggest economy in Europe. Yeah, so
Germans are going to be just fine, Stelio.
Oh, I know, in the long run, yes, but they have their cycles as well, and we know that Germany.
They have their cycles, but there are a lot of people that don't remember. The US hasn't posted a trade surplus since Clinton, and let's add to that it wasn't, of course, an actual trade surplus.
Budget surplus.
Budget surplus,
yeah,
yes.
Yeah.
They haven't posted a positive budget surplus since I don't even remember when, because even during the Clinton years, we had this BS with off-budget items. So it was a budget surplus only because the off-budget items, which they keep increasing as a percentage, are not being counted, right?
Yes.
Because if we count them, as I've said before, the US is probably running during this year like something like an 8 to 9% deficit. Now, Germany, which doesn't do its budgets like that, but the proper way, if you go back and look at the deficit of Germany since the 90s, just to give you an idea, they had a budget surplus for every single year from 1990 to 2006. And there were plenty of years that the budget surplus was above 3%. So we're talking about a country that is running both a trade surplus, of course, a huge trade surplus, and a budget surplus for, if we take like from 90s to 2020, so if we take like the last 30 years in essence, it has been running consecutive from 1990s to like 2006. And then between 2006 and like today, it has been running like half the years a budget surplus, some years like, no surplus, no deficit, and some years like a small deficit. So for example, the biggest deficit they've run is something like 1.9%. So Germany,
and you have to remember also during the European crisis, they performed really well, right?
Absolutely. Because the fun part is that Germany is being accused like that it's 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 fiscally irresponsible for being fiscally responsible. We've got to the part of insanity that now, if you are fiscally responsible, what was advocated and accepted by everybody, that was fiscal responsibility until, like, let's say 15-20 years ago, now being fiscally responsible is irresponsible because you're not pumping money in the market as the rest are doing. Yeah,
you're not helping the others.
Yes, yes, which is plain craziness, right?
Yeah,
I mean, they're doing what they have to do because the rules of economics haven't changed. I mean, they want to believe that they've changed, but of course, reality will always hit you like a train. So the reality is that at some point, all those debts, all those piles of debt and all those huge deficits are going to come home to roost, and they're going to have to pay the piper, the countries that are running them. And Germany, being prudent, it doesn't want to play that game. And something, I would love to be a German citizen because Germany is going to overperform by a lot for not going into this game of derailment, having to do with how they handle economics.
True. But having said all that, when Germany does enter, if they enter a recession, or if they have a turn down in economic activity, then that's going to affect the whole Eurozone area, obviously. So
yeah, it is. But as I said, Germany is going to do just fine.
Absolutely, I agree 100%.
Yes. Okay, Stel, do we have anything else before we go to the charts?
No, that is pretty much it.
Okay, perfect.
Thanks, man.
Okay, we have quite a few questions. I think that Blake answered the questions having to do with his stock market outlooks, because we have a couple of questions about that. Now we have a question about the Kiwi, the Euro. Okay, now let me go first through a couple of of the most popular charts, because I have some comments, and then we can go to the less mainstream. So we have a question about the Euro USD. Nothing has changed, since yesterday. So my point of view here is 110.80 is an important level. We also have this trend line, which we're currently testing, the broken trend line support. Theoretically speaking, we closed, just a bit below it yesterday, but that's not so big of a deal. 110.80 is important. So against 110.80, I mean, you can be long from a risk reward perspective. It makes sense. Having to do with the cable, I still believe this is likely a triangle here, and as long as we respect it, there is a decent chance that we see a continuation higher. Now we have our friend here, FX Toll, saying that the dollar is going to turn bullish and it's going to rip some heads off, and that can happen. I mean, this is a possible formation that they have here. The move lower so far definitely doesn't look impulsive, to be very frank with that. Now, on the other hand, the thing here is that the move higher didn't also have impulsive characteristics. So it's, the dollar is very hard to decipher, simply because this market has not been producing impulsive moves in one direction or the other. But since the general trend, even this slow drift higher, is ongoing since the beginning of 2018, so it's almost like 2 years now. Yeah, there is the likelihood that the dollar can continue higher for some time more to come. I mean, in the medium to long term, I'm very bearish the dollar, but as I've said multiple times, that doesn't mean that it has to manifest, right here, right now. So, for the bullish scenario to play out in the dollar, I want to see a break through this confluence of resistances. We're actually talking here about a quadruple confluence of resistances at 97.70, 97.80. So in order for me to subscribe to the bullish scenario for the dollar, I want to see a breakout from this area, because unless I see, this 97.70, 97.80 area, a break to the upside, I have no reason to be bullish the dollar even in the short term. And we're getting close to that resistance. So, turning bullish here, so close to resistance, I think it's quite dangerous. So I'm with you above that level. But, until then, I remain very, very cautious having to do with the dollar. So that's my position on the dollar as we speak. Okay, now speaking of the dollar and another dollar pair, the Aussie against the US dollar has stalled. This is the second consecutive day that we remain stuck in this retest of this broken channels trend line resistance, now acting as support. Now, the fact that we haven't seen an actual rebound from here is not a good indication for the bulls. But on the other hand, this trend line is working for now. So, from a risk reward perspective, it makes sense if you want to try the long side from here. But, if we break through this area, things look, quite tough. Now, Kiwi doesn't look that bad. And it might have a little bit more to move to the downside without actually breaking the uptrend here. We were looking several days ago, I was looking for a pullback, perhaps to retest this broken trend line resistance as support. We haven't made it back then yet. We have been pulling back, but we haven't come down. This is the 65, 60, 65, 70 area. We also have just a bit below it this confluence of the 50 and the 200 daily moving average. So, so far the Kiwis pullback doesn't look that bad, right? I mean, it was due for a corrective move lower, and so far this is what this move looks like. I mean, corrective. So, especially the Kiwi, doesn't look that bad indeed. Now, having to do with the Aussie against the Kiwi, if you remember, I warned the other day that perhaps you should be careful down there because we were due for perhaps some short-term rebound, and we drew that. This seems to be happening here, but I have to openly say that probably I'm viewing this rebound as corrective as well. So, I wouldn't be finding this as a buying opportunity. Probably I would be looking to sell this rebound higher, perhaps, closer to the 1045 level.
Yeah, divergence worked, huh?
Yeah, it did. Now, having to do with the Aussie against the yen, a little half a day false break lower from this wedge, and the Kiwi against the yen didn't produce the same kind of deal. It actually held this ascending channels support. So for the time being, we're still in recovery mode, but, keep the big picture in mind also here in the Kiwi yen. The big picture in the Kiwi yen is that we still remain within a larger descending channel. So, in the short term, we've been consistently rebounding within this channel, but this is all part of a bigger channel, which is descending. So, any rebound towards the 74.80 area, I think would probably produce a medium-term selling opportunity. So I'm skeptical about this move higher in the Kiwi yen as well. In general, I'm quite skeptical with what the USD yen has been doing. A friend here made a very correct comment. He said the USD yen is working out in producing a bullish engulfing on the weekly, and you can see it here. It's not yet a bullish engulfing, but a few pips higher, and it's going to be one. And a bullish engulfing on the weekly is, it's quite a big reversal signal. But on the other hand, Blake has already shown this. We have this, you can see it here in the weekly, we have this descending trend line resistance. I mean, definitely a huge trend line in the market. I mean, this trend line has been respected from the market since the middle of 2015. So it's going to soon be a 5-year held trend line resistance, right? So, if we're talking about like medium-term outlook, would I be with this trend line passing currently from like 110.50? Would I be turning like really bullish at 109.50 just because we have a bullish engulfing on the weekly chart? When 100 pips higher, we have this, huge trend line for the market? No, I wouldn't. So I remain very, very skeptical having to do with the USD yen. Even look at the RSI profile on the weekly chart. I mean, stuck roughly at 56. So anything below 60 can easily be corrective, right? So I have to say that the USD yen remains very hard to decipher and very hard to trade. I mean, just look at on the daily chart, we got this looked like a nice corrective bounce higher. We broke through trend line support, and then we held this horizontal support area, and now we're back within this wedge. So USD yen, I've abstained from trading it for quite some time, as I've said here on the webinar multiple times, and I feel very good for having done so, because in my opinion, if I attempted to trade this pair, I would have probably lost a lot of money trying to swing trade something that remains very choppy. So, sometimes the best trade you can do in a market is just stay away from that market. And that's what I've done in this market. I'm quite happy with it. So, 1980 remains resistance. And then we have, as I've said, this trend line. You can see it here if I extend it. We have this trend line, longer term trend line that passes a little bit higher, roughly at 110.50. So would I be turning bullish here? No, I wouldn't. Would I be turning bearish here? I mean, from a risk reward perspective, it makes sense if you want to be short here. Now, would I be short here? No, because as I said, this remains a very choppy market. But if for some reason you just, you want to force a trade in USD yen, I mean, we're very close to this 109.70, 109.80, which is an area we haven't managed to breach above since last May. So, I mean, yeah, you can be short if you want to. Personally, as I said, I think you should be looking for other markets to trade, but, everybody has a different taste for, risk markets or have a different outlook. So, it is what it is. Now, having to do with the USD CAD, Blake said that someone mentioned an analyst they track in the fund. They would be selling USD CAD at 130.50. And I have to say that I totally see the point in that, because that is what I have on my charts anyhow. I mean, we broke through this ascending channel, and we're currently retesting the previous low and this channel's trend line support as resistance. So yeah, I see the somebody can also say that we had a confirmed low here on the daily RSI, because the daily RSI hit 25, which is oversold territory, which is probably an indication that it's better to look lower than higher. So I have to say that I do see the point in selling 130.50. I mean, it makes sense, right? Now, having to do with the NATI, do you mean the natural gas, Chad? You want to have a look at natural gas? Anyhow, I'll check your answer. Hi, Steve, Euro USD. I covered that. Gold and silver. Yes, we're going to go through that. USD MXN. Yeah, we're going to go through that as well. Okay, let's go through the metals first. Now, having to do with gold and silver, two comments on gold and silver. Comment number one, they've both so far found support where you would expect them to find support. So I said yesterday, having to do with silver, that if we break through this channel, which we've now done, the first area of support that you should be looking for is 107.70. So that's actually where the area we tested earlier today. And, so far we're seeing an initial rebound from there. And having to do with gold, I said that, an initial rebound area, which probably is not going to be enough. It's this 105.55 area. So, we're testing that area as we speak. Now, personally speaking, if I had to trade gold in the shorter term, and let's switch to a shorter time frame. This is the 4-hour chart on gold. Here it is. I have to say that I would probably be looking to sell this short-term move if I wanted to trade it in the short term, which I don't. Okay, so I would probably sell this for another move lower before higher. Okay, so I don't think that this gold correction is probably done so soon, in like 2 trading days. It's not impossible, but it's unlikely. Okay, same deal here with silver. Probably silver is going to end up, you know, moving lower before higher, but I do maintain a bullish outlook in the medium to long term. Okay, so that hasn't changed at all. So we're currently testing supports. We might see like a short-term rebound from there. Likely to see then another sell-off before. I would want us to either correct more in time or more in price, or somewhere in between, a combination of the two, a little bit more in time and a little bit more in price, before we can continue higher, because undoubtedly, especially gold was like extremely overbought. Speaking of overbought markets, yesterday, you remember I was talking yesterday about the possibility of palladium producing a long white candle, which would have been the 11th, 12th, or something like that consecutive up day. And it was the longest, meaning the biggest up day that we've had, which is very unusual to see, like the biggest up day or a down day in a streak of up days or down days being, the biggest as well. And usually when you see something like that, might be an indication of exhaustion. So today, earlier on the day, we had another move higher. I mean, big move higher, like another, like almost like $50 of upside, and we've now retraced like all of it. We are currently producing like a huge doji on the daily, so that's probably another indication that this market is getting exhausted to the upside. So I would be very, very careful from there. So yeah, I think palladium might be close to producing an exhaustion move as well. So keep that in mind. I said it yesterday, and I do see these indications today as well. I've just started to study the trading. What can you advise me to read? I mean, the books. Yeah, I would start from the basics, Ayaz. I mean, I would start from reading, candlesticks, several books, good enough books for candlesticks. I would then start reading, basic technical analysis rules and take it from there. Definitely, you need to do some studying on money management, right? Because our main concern as traders, and the main job we have is to exercise proper money management, because exercising proper money management in essence means that you force yourself to trade by following mathematical rules instead of following your psychology. You know what I mean?
May I suggest that it would also be a great way to expose yourself to trading would be to hang out in our chat room for at least about 6 hours a day and watch experienced traders share their technical work and why they're doing what they're doing. And I think that can, along with reading, expedite the learning curve.
Very, very true. Very, very true.
Surround yourself with people better than you, and eventually you can rise to that level. So I think it's a great environment for someone to learn, plus all the things that you have on the website too anyway, and seeing trades and how pros structure them, and seeing it live. You don't get anything live out of a book, and you don't trade, you trade live. So translating knowledge into execution takes seeing it for yourself. And I'm not saying we're the only community, just the best one. Okay. I think it's actually, you know what, Steve? I did what you usually do.
What is that?
I talked 1 minute over when my interview with Barack Kaplan was supposed to happen.
Oh my God.
Go ahead.
Inexcusable.
Ream me. Talk to me about my manners. All right.
Inexcusable.
Well,
Okay, and I'll be even worse than that. I'll take even 10 more seconds from your interview. Just 10 more seconds because
okay.
we had this question. The question was, what's happening here with USDMXN? The only thing I can tell you is that USDMXN is still trading below this very long-term triangle. So I have to tell you that, as long as that's the case, I have nothing bullish to say about USDMXN, right? So it is what it is. I mean, this is like a huge formation. We've broken through it. And, as long as that's the case, you should be looking lower.
If you're staying long, pick up another bottle of tequila. That's all I can say. All right.
Probably.
Maybe it'll turn. It will turn when you eat the worm.
Yeah, or they can, or you can try the, how do you call it, coach? The Kersor technique.
Oh yeah, you could do that too, but that costs $999.99. All right, buddy.
I'm afraid that the Kersor technique probably then becomes the Kers technique.
Yeah,
because you start cursing.
If that doesn't work, try a magnet on your screen. All right. So anyway,
not if it's easy, not if it's an old CRT screen because
oh,
you're gonna
that's
break
right.
it.
Yeah, it'd be like an Etch-a-Sketch. All right.
Yeah.
Thank you, bro.
Okay, coach. Enjoy the interview.
Thank you, Barack.
Bye-bye.
Great to have you back, buddy. And I tweeted yesterday, actually, Barack, with the extreme action that we have had in the last couple of days. It's really going to be interesting to see what channels are respected. Hi, Barack.
Hello, how are you?
Good. How are you, my trading warrior brother?
Thank you very much.
Have you been in Zoom? Have you been in Zoom before to know how to share the screen?
Yeah. Let me see. I think last time was that. So I need to
green button that says share.
Share my screen, right?
Yeah.
All right.
Yes.
Getting it.
Perfect.
Beautiful.
Do you see it?
Got it.
All right.
All right.
So yeah, for people who don't know me, it's Burak from tradingchannels.uk. So we have, I think this is our third or fourth time. So without going into
You're a regular.
too much introduction, yeah, I kind of enjoy it. Yeah, it's nice to listen to you and then speak about all the markets, which I do. I can do for hours, just like you guys. I can see how the discussions can go for a long time.
Yes,
we can speak about the markets all day, every day.
We could get we could get obsessed, and then everything that's happening in the world, kind of, well, what will the bonds do about this? Oil do about this?
That's
so,
right.
yeah, Shakespeare laid the curse on us. Maybe we live in interesting times, and we do.
Yes, it is. I mean, there's a lot of interest into trading and loads of people commenting. So it's, I've been maybe 6-7 years only blogging, but I think the last 2 years it has increased immensely. People want to learn more about it. So yeah, interesting times.
Yeah. So wow, it looks like we're starting with S&Ps and
the usual suspects.
Okay, go ahead, bro.
All right. So the breakout from the golden channel, which was right here, and the back test was obviously quite bullish, and then the blue resistance here got broken out and got back tested, and it was back tested a few times here too. This is obviously the news here from Iran,
right?
And this is the Iranian strike onto the bases, but nonetheless,
it respected the breakout of the orange line,
exactly.
The blue line breakout or orange line breakout. It came right back to that line, respected.
Yes.
Because that channel goes back how far? A year or so?
This is May. Yeah.
Okay.
Last year, May.
Okay.
And the blue one was holding, but of course this is news triggered, so it is kind of got in there, but buyers came back in pretty quickly, and now we're at a new all-time high, and I think maybe we're gonna get maybe this one will hold for a while, but the blue resistance now, it's getting tested. It's holding for now, but probably, maybe we get another pullback, but as long as this red and the golden supports are holding, I believe there is more upside, maybe to the red top band. So this red channel is forming, looks like it's forming. The top band, nicely defined channel to the upside. And yeah, there is nothing bearish in sight at the moment, which is why I did this mode on still. On Dow Jones, it is was a similar breakout from the golden top band. You can see it's a long term. So this is from 2017. 3 touches. The fourth one cleared it, and the back test was a beautiful bounce together with the blue bottom band. So this here, the blue channel, got confirmed at this low, and this is where it was a unmistakably buy signal. We were watching all of it, of course, not only Dow Jones, but on S&P, NASDAQ, which I will show. So when all of those things come together at this one particular date and location and level, at their respective supports, then it's quite a high probability trade buying it there. And then the Dow Jones came all the way to the green resistance, which was tested 3, 4, 5 more, and then you can see that the next 2 touches held, and this is again news, and it kind of caused a damage. Oops. It caused a damage, but it still managed to hold, and now we are also at an all-time high, and the red top band. So the red channel is perfectly formed with 4 touches on its top band, and the 5th one is coming right now. So a break to the upside, I believe there is not much resistance above it. So there's kind of...
So we either stop here or pretty soon, or we're entering the parabolic stage.
Yes, yes.
The parabola, if you use a compass, we're starting to enter a parabolic phase for a blow-off. Is that what your charts are telling you? Okay.
Yeah. I'm
nothing negative.
It's a long shot. Yeah, a long shot to get all the way to the blue top band. I mean, I wouldn't say it's going to go there, but if it breaks to the upside, that's still another buy signal. So there is, as you said.
What would be your first warning sign, Barak?
Blue channels break.
Okay, the blue and the green line intersect right there.
These two.
Yeah.
If these two, I mean, if we sell off and then break them to the downside, that would be at least a short-term sell signal.
Right. You don't have anything like that in the S&Ps because the Dow was weaker.
On S&P, it's the same, the red and the golden. So if it sells, let's say if it's
3,200,
if you stop here and break these to the downside below 3,200, that would make things a little bit, kind of really bearish now all of a sudden. So
thank you, buddy, because we always have to, all we're doing, we're always reassessing based upon what we get, and it's kind of good to know where a scenario becomes invalidated.
Yeah, right? It is scenarios, and they're all dependent on price action. Right. There is nothing like, I can say this is going to be 9,000, 10,000 on NASDAQ. I can never say that. I can only say these are the supports that are holding, and as long as they do, and as long as we see touches on the supports, we keep buying them. This is price action trading rather than depending on several scenarios, or I don't do any Fibonacci's, all sorts. I don't do those things. It's just the lines I follow.
So on the pure.
NASDAQ, yes, it's I keep the longer term. I keep only the ones that are important to my eyes.
Right.
And
great point.
For the NASDAQ, for example, is the golden again. 1, 2, 3. This is a back test after the breakout, and this is another back test after the breakout. The green one hasn't formed yet, so it's just I'm keeping it as a reference. But this here on the golden backtest, and it happened when Nasdaq and S&P, Dow Jones and S&P were touching their supports as well. Right. So that's what I mentioned. I mean, when you have something so synchronized after the breakout, that is where you heavily buy. That is what happens. And now the blue resistance is broken. You can see that 1, 2, 3, third touch, and the fourth one cleared it, and now we got back tested. And more importantly, the red top band was also cleared, and they are holding as supports. So that is also as like a parabolic. You can see the green resistance is getting forced to break. You can see 1, 2, 3, and then the fourth one has cleared it. You can see very, very eager to keep going. Okay. So why would anyone really take a short position? I don't know. I just want to emphasize that there is no reason before the price action to short anything or to buy anything. That is kind of my motto for trading. Okay. This is our Russell 2000, and the break out of the blue channel and the back test a few times. It was quite persistent, but it didn't go back into the blue channel. And the red one, the red top band, held a few times, and that was the only bearish thing that could have happened for Russell. But actually, it then break it to the upside, which was again very bullish. And this action here again, news triggered, and the green top band and a little bit help from the red. You can see it still managed to recover with these supports. On FTSE, this is here the golden channel, a major channel from 2019 January. So actually, just like the others, I mean, there's a major channel, but it's not as steep as the US indices, obviously.
Although it is a US index.
No, this is UK.
Oh, UK. I thought it was Russell.
This is FTSE UK.
Okay, yeah.
And this.
Do you draw any conclusions? I know your pure chart is from some of these European bourses not being as strong as US.
I mean, FTSE has barely taken out 2008, 2007 top, so it is very, very weak compared to US indices. Okay. It's really not booming in any way or form. So and look at this, even this golden channel from last year. The slope is so low. It's such a small slope. It looks like a bear flag to me. But obviously, this can go all the way to the golden top band before it reverses. But for now, we are holding the long from here. This was really a very, very easy buy. And the blue resistance is broken too. So this was here 1, 2, 3, 4 touches.
So do you buy more on this breakout of a bull flag here?
I think
what if you're flat? What do you do?
The buy was here. It didn't touch it. I was planning to add to it. It didn't touch the red, and it happened so quickly during the news. So I couldn't buy it. I mean, it's still a buy. I'm not debating that it's not, but this is a nice consolidation, which is now breaking to the upside. But there are better things to buy. If you were to buy here, that is already, it's 500 points. But here, FTSE is very weak. So I would rather have DAX rather than FTSE. DAX is, this is the October low, which came at the green bottom band. Right. And now this is the third and fourth touches, and the green channel is the one to watch for let's say if it's going to turn to the bear side, to the short side, maybe the trigger will be the blue top band. Now, this is also from 2019 January. And if we see a reversal here and break the green bottom band, all of a sudden DAX would look quite bearish. But since October, it was very, very bullish. I mean, especially with this kind of break. You can see a few touches. Let me call it the red one. 1, 2, 3, 4, 5 touches, and then the breakout. That was also a confirmation. So on Forex, euro has cleared the long term. This is a daily chart. I use always log scale, by the way. The 5 touches and then the break, the back test of that blue resistance was bullish, and this is the bounce, but it's not really happening. It's not really surging to.
Do you have any rule, like maybe too many touches of a particular channel have it perhaps more vulnerable than less opportunities to play that level? Do you know what I'm saying, Barak? Like it's given, okay, you didn't buy the red line break there, so we'll let you do it now a month later, almost at the same level.
Yeah, if it comes to the blue broken resistance again for another back test, I would again try another long.
Okay, where's that coming in? 108?
It's way down. It's not the same level. It's coming right here. So that is like 110. Okay. Just about 110 maybe. Okay. Depends on how fast it gets there, obviously. Yeah. When and if it gets there.
It's an NFP report away.
Yeah. Can happen, yeah. Okay. But it is it's far from being very, very impulsive. And I think
that's an Elliott term. You're a channel guy.
Yeah, but it is kind of like thrust.
All right.
That's like but I have been Elliott back in 2010. So
okay. All right.
And I kind of left it there.
Do you know why R.N. Elliott, when he's walking down the street, had waved at everyone he saw?
Why?
He was impulsive. But don't worry, his wife was corrective.
Okay, these are the Elliott wave jokes then.
That's the only one I have. Everyone's heard it 100 times. Yeah. Anyway, so here we go.
US dollar index. So the red and the blue supports came together right here. Mm-hmm. This is like double channel support. Yeah. And the blue one looks like a bull flag at the moment within the red channel. And this explains why euro couldn't really pass through. Yeah. Because 50% of it is euro, right? Right. And if and when the blue channel breaks to the upside, if it comes here and then it would look much worse for all the currencies against the US dollar. I'm not saying it will. Again, it's price action evident. So if it does and when it does, then we can consider what to do. And the red bottom band, if it breaks to the downside, then it would be obviously quite bearish for US dollar. So for now, it looks bullish, and that's what matters.
Can you go back to that for just 1 second? So if we break above 97.50, the blue channel, then we could make a move above par.
Let's see. Par. This is 9. Depending on when it gets there, right? Yeah. 97, 90, 97, 80, 60. So it's not that is kind of the level where we may breach the blue top band.
And get another rally back to the red top line of the channel. Okay.
That's right. Yeah, it is like
you call them return lines, the lines above. What terminology?
The top band, I call it the top band of the channel. Okay. So 2 touches on the top. The third one would be also very nice to see. Okay. And if the blue channel breaks to the upside, I believe it's going to get there to the red top band at around 100.
Okay. Mm-hmm. Nice look.
And pound is very nicely moving within the technical picture. The blue resistance was the stopper of the rally, so you can see it's very, very accurate. And now the green channel may form. I'm just saying it may form because it needs another touch on its bottom band and the bounce. So that needs a confirmation. But short term, the small blue channel was broken and back tested here. And there is, so the black support was broken actually yesterday. And the most important one is the red resistance, which already has 3 touches. So the scenario is if the green channel holds at the bottom, then it will probably break the red to the upside. Then we can maybe get to 135 again. So this is against stronger US dollar, clearly. But pound is a different animal right now because it has been battered so much since 2016. They play its own game. So that is the only explanation I can make.
Are the people in the UK confused about what's going on? As much as we are.
They were. Now we are not very confused anymore. We are getting out. So
okay.
We'll see actually what happens after end of this month. It's not going to be a very big shock. I think there's a transition period, but at least there is certainty that Brexit is happening and there's no more negotiations. So it is certain. And from there on, we'll see what happens.
Okay.
Mm-hmm. And Aussie dollar, the top band, double resistance, which was the red. So you can see the red had 3 touches, and the second touch, together with the green top band, was a little bit damaged, but it still held. And now it explains why Aussie has been selling off, because also it accelerated after the break of the red channel to the downside. Now there is this very thin, very steep blue channel that has formed, and I believe if it breaks to the upside, we'll see some rally. But more importantly, I think Steve showed this as well. This golden broken resistance was back tested here, and it's getting back tested here again. So that is, I think, and it is within the green channel still. So there may be more upside, because this has been a long-term resistance from 2018, and it is broken. Again, this is against the stronger US dollar. So it remains to be seen what's happening on that US dollar index channels. Same thing with the, okay, let me show this as a Kiwi long-term, if I can. So the Kiwi long-term, the red, this is a sideways channel from 2011. So the bottom band bounce confirmed it as a channel, and the green bear flag was broken back into. I'm sorry, there's so many lines here, but because I'm focusing on more on the shorter term there, but you can see the green bear flag was broken to the downside, and now it's broken to the upside, and also the golden resistance is broken. So I think Kiwi is also looking rather bullish, even though it is now selling off within the blue channel. I think it is bullish.
I'd be interested, since we're kind of starting to, get towards the end, the tremendous moves that we had in the metals and the energy. I'm wondering how they respected things.
Let's do this. On oil, the peak
went right there.
The peak.
Did you have that gold line in before it got there?
No,
okay.
no, because
it just happened.
But But the red one, you can see the red one just touched, even though it was very news triggered, it was perfectly
Did it take out
aligned.
that high a little bit all the way to the left? You know, the left, it looks like, yeah, all the way back.
I don't think so. I think it came very close. No, it's actually lower.
Lower high. Okay.
Yeah. So I think the golden channel has a chance here. And I actually bought 60 today.
Okay.
But it's forcing my hand. If it breaks it to the downside, I would probably fold.
Okay.
It's still struggling to keep going. But this here is also from Trump's speech. I think it fell too fast, too much, and it will recover, I believe, to 62-ish. So I'm still keeping my hopes high. We'll see today, I guess.
Yeah, it looks like you have more touches. You have more touches on the top channel than you do on the bottom.
The top is two touches, and on the bottom is 3 now.
Oh, 3.
So you can see, if you count this is now the third touch today.
2.
Yeah, 2 here and this one here.
Yeah, I kind of count that as one touch, and then what's going on here is another touch. But yeah, okay.
So energy, Nasdaq.
It's going to break that, Barack.
Huh?
It's going to break that eventually.
Yeah.
Just my view.
Yeah, maybe. Yeah, we'll see. I think eventually
what do I know?
It may break it.
I'm just a blind squirrel in the middle of a snow-covered forest.
But I think it may go to the red top band one more time and then come back down. Yeah.
Okay.
This is here the Nat Gas. The red support from 2016 is holding for now at the very recent bottom. So
the Widowmaker.
Yes. Everybody calls it Widowmaker. Yeah, it is.
Well, you know how many guys have had heart attacks trading trading it? Okay.
I mean, last year's rally took out a fund, right? I mean, everybody saw that guy. So I know it's a lot of lines here, but if you look at it independently, the golden channel is broken and back tested. The black one is holding. The blue resistance rail is holding still. There is still some resistances to be taken out. And as long as this red long-term support is holding, there is hope. There is hope. And let's see.
Hope is the oxygen in our lives and the carbon monoxide in our trading.
A lot of people are hoping for nat gas. I am too. I bought it yesterday after seeing the red support. And I'm hoping.
Okay.
The gold was a double resistance right here, and it still is. I mean, it was bashed during the last
it blew through that line like crazy.
But it is news, so it doesn't count in my in my book. It doesn't count as a breakout, so it may still come back and all the way down to the golden bottom band. Unthinkable. I know everybody says gold cannot do that.
The lower one? Where's that come in?
Here.
Where's that come in?
1300.
That's possible.
So if the blue channel breaks to the downside, I believe it can. But it just has to
Let me ask you, you have a little Elliott here. So, okay, you show this chart. It goes all the way back to the 2011 high. And for a bit, we got through the 61.8. I think it was 1558 or something. As an Elliottician, could this whole thing from 2015 be a corrective rally from the 8-year decline, 1900 to 1050, form-wise?
I'm telling it from a technical TA or channel's point of view rather than Elliottician, because it is looking like a bear flag. Let's put it that way.
This whole rally from 2015.
Yeah, the golden channel.
Yeah,
is for the moment, unless it breaks, it gets broken to the upside. It is a bear flag. Looking at it as a cold, right? It is based on basically only lines.
Where is that golden line up on top, buddy? That it needs to close above. Can you give me a price?
It's actually 1600. You mean This spike, yeah, it
No,
doesn't
no,
count,
not
but
the-
it's a,
Yeah, the gold line. Where is it coming
the
in?
gold line here is around 1590.
Okay.
Yeah.
Thank you.
Sure. And last but not least is silver. The spike, and I had these, by the way, plotted before this happened.
The blues,
Yes,
not
blue
the
and the
red,
red.
but the blues.
Also the red. Yeah.
Well, how? Based upon it was geometric to what the three
Yeah.
touches you had on the bottom?
I was
Yeah.
expecting this to become a channel, and then I
Okay.
put it there. And then I said, you know, this could be a nice double resistance, but it happened so fast, I didn't short it. But it's still, you can see the blue channel is broken too.
Yeah.
So that makes things quite bearish for silver, and probably we may have another touch on the red bottom band.
Uh-huh.
And then this red channel is also is a bull flag on its own, right? It looks
Right.
like from the slope of it,
Right.
it looks like a bull flag.
Like a
So
eventual
we can't
breakout.
deny that. Yeah,
Okay. With one more test down there. Okay.
that's right.
And
Yeah.
your bottom red line would come in where early, like in the spring?
16-ish. Yeah.
That
Somewhere
down
here.
there.
If we fall there, it's a
16.
yeah, 16-ish. I mean, depending
Okay.
on how fast it gets there, is February,
Okay.
March, if it
Okay.
takes its time.
Actually, I have some cycle lows to do in the spring.
Okay,
All right. So great.
that's it
That's
for
it.
now. Yeah,
Well, you know what?
we covered 14 markets, I think.
In record time, Barack, you're the best, buddy.
Thank
You
you.
know, I hope that 2020 is your best year ever in the markets and in
Thank
every
you,
other
Dale.
way.
Thank you, Dale. Thank you. So for you. Thank you very much.
Thank you, Barack. I'm proud to call you my trading warrior brother. I love your channel work. I think you're one of the best
Thank
at
you very
just
much.
using only channels. So thanks for edifying
mate.
our community, buddy.
Sure. Thank you. Thank you, Dale. Thanks for having me.
All right, that's a wrap, everybody. See everyone for the NFP. Remember, don't just count your pips, count your blessings. Money comes and goes. Time is gone forever. Make it count. Adios, warriors.
Bye.
See you, Barack.